The following content is for informational purposes only. The views and opinions expressed by the hosts and guests are solely their own and do not necessarily reflect the views of Alia, its affiliates, or any organizations represented by the participants. Nothing discussed should be construed as financial, legal, or investment advice.
Welcome to Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving in markets. I'm your host, Stefano, Director of Institutional Services at Alea, and with me I have CJ Fong, APAC General Manager at GSR. GSR is a global crypto capital markets partner founded in 2013 that trades digital assets across spot and derivative markets and invests in blockchain startups. The firm works with exchanges, institutional investors, and token issuers to help structure and support trading as new crypto assets come to market. CJ, welcome on the show.
Thank you. It's a pleasure to be here, sir.
Likewise, it's great to have you with us finally. As we were saying before the show, it was we met in Hong Kong during Consensus in a noodle shop of all places, and that's what I really liked about Hong Kong as a conference city in general is that the city is so dense. You just keep running into people in random places like the coffee shop, walking bridges, everywhere. How was Consensus for you? And I imagine you've attended a few of them over the years. What stood out about this year?
All right. Well, firstly, thanks for having me on the show. It was a pleasure. And like you rightly pointed out, call it fate, kismet, however you want to address it, right? By being in that coffee shop, seeing you explore the local culture was phenomenal. Hong Kong as a city, I hold it dear to my heart. I spent 12 years in the city, actually, back in my finance days. So I'm very familiar with it as an island. Consensus was interesting, right? I mean, this is probably the second time in recent years it's been back in Hong Kong. It did start off there a long time ago, before it predominantly moved to Austin. So Consensus in the US side of it. Spent a lot of time going to the Austin one. It's very, very different feel. So to your point, I think what Hong Kong has managed to achieve, and this goes to your point of it being a very closed and tight-knit city, is also the fact that because of that, you're able to bring people from all walks of life within the Web3 space. And not even that, but people who want to learn about it. Whereas in Austin, what you had was really Web3 natives who flew into a city and were almost on campus there and interacting with each other. What that means then is in Hong Kong, there were a lot more positive discussions with institutions, a lot more of the traditional finance guys looking in and saying, look, I want to learn more, walking in here and figuring it out. It was amazing, right? And yes, it was slightly more muted this year, I would say. And obviously the market is very different now this year than it was last year. But if you think about it, crypto has been in cycles. We've gone through many of these cycles. All that happens during market fundamentals like where we are sitting now is that people have more quality discussions. And I think that's what we observed a lot in Consensus.
Absolutely. There was a lot of room for those quality discussions. Again, in all kinds of places. As you mentioned, there are a lot of TradFi guys in attendance as well, right? You were one of those TradFi guys. You have a history at Nomura, Morgan Stanley, JPMorgan. Can you tell us a little bit? Of course, it stretches a long time, but maybe you could tell us a little bit about the common denominator in that career trajectory and how that shaped your thinking around digital assets today.
Of course. I think it was a very interesting story, and I think you've put it very nicely. My career began on the trading floor. I've always predominantly been on the trading floor, what we refer to as global market sales and trading, many names for it. I've also had stints within private wealth management at both Morgan Stanley and Nomura as well. And what the common denominator amongst all of them were, you were always at the forefront of the macroeconomic environment. If you think about the concept of macroeconomic news, when you have a release on a headline, yes, eventually we think about, okay, how does it affect the layman? But in the macroeconomic and sales and trading world, it had instant reactions. It affected FX prices straight away, interest rates straight away, equity markets straight away. Not only that, and I think to your point about how it's really taken over and pulled to the next phase of where my career is now, it was the people that you work with. I think some of the smartest people I've ever worked with were in these shops. They're some of the brightest, some of the most driven, some of the hungriest. But The flip side to that is, for lack of a better term, they're also some of the most ruthless. And I think that's
Mm.
something which I'm grateful hasn't ported over. I think being in capital markets in Web3 has been a breath of fresh air. Once again, it's on a market that's at the forefront, right? Everybody right now refers to the volatility we see in Web3 and Bitcoin and Ethereum. Everybody talks about the new ETFs which are going to be launched. It's amazing to be part of that because I feel almost reborn again. I was part of the structured derivatives movement when I was in traditional finance, just as Lehman was going under, and it was caused by a lot of this. So seeing all of these things together. But now within the world of Web3, we're seeing these evolutionary aspects of the market, which I think is amazing. But the flip side, which I think is really good about it, is what hasn't ported over is that ruthlessness. I think on one hand, yes, you have a bunch of people in the Web3 space who a scammer is a scammer, a rug puller is a rug puller. And I think we're never going to move away from that. But you also have this thing where you see in conferences, interesting enough to your point, where everybody's just willing to have a conversation. You never know what business will come from. And I think that's what makes Web3 so special as well at the same time.
It's very interesting that because a lot of people I talk to um, are, and in this industry in general, are first timers of sorts, right? This is their first industry. We
Yeah.
don't have a lot of comparative material, if you will, to say like, oh, okay, this industry is different in this aspect, and actually be able to talk about that from firsthand experience. Can you talk a little bit more? I'm curious, was that what drove you to this industry in the first place? Or were there other factors going into that as well?
Yeah, no worries. I'm gonna have to be very candid and come clean. I wasn't one of those blockchain evangelists when it first came out. I've been in space since 2017. Interestingly enough, I saw it as two things, right? And I bifurcated them in my mind. On one hand, you had the technology. I thought that was pretty cool. I thought I'd see the concept of DLTs, and that's where it all began for, and the concept of trustless transactions. We talk about the central bank lack of it. That's how Bitcoin came about. But fundamentally, DLTs are trustless transactions. That struck a chord because, obviously speaking, especially when I was based in Hong Kong, you see everybody doing online shopping. It's such a natural thing to do. And sometimes you
Mhm.
wonder about the originality of the good. Where is that good currently in transit? And that's where things like blockchain come together, right? The capital markets portion was interesting. I must say, I wasn't particularly drawn to it at first. And part of it is the market, when I first joined in 2017 in the industry, it wasn't as mature as it is now. And I'm not saying that it has fully matured either. But I would say that we've at least moved from being a baby crawling on the floor to maybe a toddler starting to walk, maybe preteen sort of logic. And I say this because when I first started, it was still the Wild West. The capital markets were still the Wild West. If you think about even market making, this was pre iDream, but the origination of market making in Web3 in 2013 when GSR was founded was still manual entry on the ledger. I mean, if you pull up a screen of what the original Coinbase looks like as well, it's come a long way since then. And so I think now, is it the part of the market that makes me want to stay? Yes. But was it the initial part of it that pulled me in? Probably not.
Very interesting. Okay, so what, like how it almost sounds like somebody forced you into it.
Uh, yes and no. Interestingly enough, you're not wrong in that, right? It was almost time for a
Mm.
career change for me, right? Been
Oh
doing
yeah.
the traditional finance, wanted to try something different. This was a market that was growing at the time. And what I saw in the market was opportunistic, right? It's an opportunity. I think the concept of blue ocean back in 2017 really existed for Web3. No one knew what it could become. And I think this is to that point. What really has kept me here has been working at GSR, has the trust given by the founders, the CEO to help build a business. And I think that's fundamentally it. I think we can talk about the industry all day, but at the end of the
Yeah.
day, for a lot of people, when you reach a certain age in your career, it's almost that desire and drive to build something that's a legacy. And I kind of feel like that's what GSR has afforded me, right? To build it from a little seedling and hopefully one day into a massive oak tree. And that's where the drive has come. You're no longer part of the machine. You are writing the specifications for the machine. You're the one putting it together. And I think that's been pretty cool.
Love it. That resonates a lot. Let's talk a bit more about GSR.
Of
You
course.
guys are, of course, most well known for being a market maker, but you guys also do OTC. You guys do VC, you guys do treasury management. Please tell us a little bit more about the different business lines that GSR is involved in, but also how that evolved over time, right? You guys have been around for a few cycles now since
Yep.
2013, and rightly, as you put, one of the oaks in the industry. Um, how did that evolve over time?
Yeah, sure. So I wish I could say I was the first. I wasn't. Interestingly enough, I joined GSR only in 2020, but even back then, it was a lot smaller than it was now. I think globally, we were less than 50 people at the time. Uh, to the business lines, you mentioned them, and I think you've mentioned them very well. And interestingly enough, what joins them all together is they are all components of capital markets, which is how you described the firm initially. If you think about it, right? That
Hmm.
section of the market that, interestingly enough, wasn't what a lot of the builders in Web3 were actually looking at. A lot of them come up with the technology aspect. They were trying to come up with technology solutions for problems they found. It wasn't to look at the capital markets. It wasn't where is my price of a token. It wasn't what the volatility looked like. They didn't look at that. It was to build something. And for GSR, we realized long ago that the market needs pillars. And when I say pillars, I mean infrastructural pillars. You need participants because this is a very unique market. What makes the capital markets aspect of crypto very unique is the fact that you do have retail. You have everyday Joes, you have mom and pops in it. And it's very different from traditional markets where over years of framework, legislation, and regulation, they've ended up in places where there's protections in place. And that is why one, so for accredited investors, institutions, and retailers trade via only certain pipes. Web3 didn't have that. And if you think about that, that's actually how GSR came about. It was almost, look, we're going to start off as a market maker, but we see a gap for a participant, an infrastructural player who can provide proper OTC services, where interestingly enough, people don't realize OTC services shouldn't worry about what prices. You shouldn't be negotiating over the extra basis point. What you are concerned about is counterparty credit risk. That's what we bring to the table. Someone who you can trade with, who you trust. That's the aspect of that. It's part of the reason why we're seeing, actually, even now this year, a large movement in this sort of direction. VC was a natural one. And the reason why was GSR, over the years, yes, we've been profitable. And we wanted to invest in the ecosystem. We wanted the industry to grow and to help investing to the startups as they came along, the different infrastructure, layer ones, layer twos, and especially invest in the picks and shovels that we felt would help the industry better. That's where we've been. And we've always been at the forefront of that. A lot of the earliest layer ones, layer twos, infrastructure-based projects, GSR has been an investor in it. Treasury management was a natural evolution because of our OTC capability, because of the fact we are one of the largest options desks on the street. We have the ability and an understanding. I mean, to your point, 90% of the GSR staff probably are all ex-traditional finance guys from trading floors. So we understand that ability of, look, it's great for a foundation to say, I've raised $100 million, for instance, but it's no good if your $100 million is sitting in ETH or if it's sitting in your underlying token. That's not good treasury management. And so we had to educate. And I think that's how
Yeah.
we have always seen GSR's evolution from a business sense. We look at the market and we say, look, as an adult in the room, how can we make this market better? How can we make it more mature? And naturally, that's very positive because the better this market becomes, and we actually were talking about this before, the better the market becomes, the more mature it becomes, the more interest we tend to see from outside.
Absolutely. Um, you mentioned different counterparties already, foundations, startups. What are your primary counterparties? And yeah, how do you manage those relations?
Yeah, no worries. So GSR has always prided itself on what we call white glove service. The reason why is, as I alluded to earlier on, we bring expertise in a side of the market that we do not expect founders to have. A founder is then most of the founders are businessmen, entrepreneurs, technologists who sort of see solutions where others don't. But there is a whole other element, especially because one of the elements of this space is that concept of tokens, fundraising. And what we bring to the table is that understanding. And so because of that, that educational factor, that engagement on that level, we have to hold their hand. We have to work with these founders in terms of their journey. How should you look at building a business? How should you look at reserves? How should you look even at the evolution of your underlying token micro and macro structure, if you think about it? The other area where we come into play is with very young exchanges. GSR prides itself because almost every regulated exchange in the world, we were probably the dedicated market maker that brought it from 0 to 1, helping them bootstrap liquidity. This is another element because if you think about it, when liquidity is king, liquidity within the world of Web3 is such that if there was none, if it dried out, everything stops, so to speak, right? Nothing trades, nothing goes through. And we realized that, and we brought our expertise to working with some of the largest exchanges in the region on a global basis, helping on day one liquidity, bootstrapping that and helping them grow that.
Lovely. I see really the common pattern across like your different answers is a certain responsibility um to your counterparties, but almost also like to yourself and who you want to be. You want to be a responsible market participant who's adding value to the space by actually adding the expertise that you might have and your team might have. But that, as you mentioned, the founders or young teams at exchanges do not have, right? And in that way, you benefit the whole ecosystem, if you will, and the entire market. I think that's a very healthy professional stance, really.
I appreciate that, and you've absolutely hit the nail on the head. I still remember my first remit when I joined GSR in 2020 in the Singapore office, and the first remit from the head of Asia at the time, who's actually now the current CEO, was, look, help us get that PSA license with the MAS. Back then, being regulated in the world of Web3 wasn't a necessity. There were licenses around, but it wasn't like set in stone that you had to get it. But we thought that, look, we have to stand for something. Let's become regulated. Let's act in a regulated fashion, even though it wasn't the nature of the industry. And the reason why is, especially as a market maker, I mean, the way I can look at it is this, to all your audience out there, to yourself even, if you can't trust the bank that you put your money in, that you receive your salary in, for instance, then you've got a bit of a problem. Because if that bank was acting in such a way where you're like, is it safe? Are they doing the right thing? Are they honest about how they're operating? That becomes very problematic. And I think that's always been the ethos of GSR. We're first and foremost a client franchise. Clients come first, and doing the right thing always comes first. Even if it, honestly speaking, sometimes we have to educate our clients on what is the right thing, we will do it. We'll tell them what they don't want to hear sometimes because it's the right thing that they need to be doing.
Absolutely. Can you tell a little bit more about requiring that license? Like, because that's such a, as you put it yourself, it's such an uncommon practice really in this space. Although it is becoming more common practice as we are maturing. But it still might be very much like a topic that is like very unfamiliar to a lot of our listeners.
No, I think it's important. I think it's very different when you're on the side of the table as a builder building a startup. I mean, if you think about it, and we can use conventional Web2 worlds and words of wisdom to look at it. If you're growing a business, let's say you are building picks and shovels, for instance, so to speak, is there really oversight on a regular basis? No. If you think about it in the real world, you file taxes, employee benefits, stuff like that. But where GSR sat, meaning we saw the capital markets aspect of this industry needing to grow and accelerate, there has to be a duty of care. You have to operate in a certain way. And the reason why is if you expect the worlds to collide, which we're seeing now, so to speak, then you can't say, well, these are the rules I play by. We're all going to play on the same pitch. It doesn't work like that. You need to understand what the set of rules are. And I think that was the vision that we had as a firm, that getting regulated was the right thing to do because it was moving in that direction. And we got it spot on. We were one of the first, I think we got the fourth or fifth license in Singapore. We were one of the first market makers to get that license. We hold it to today. And it means, well, on one hand, it means regulatory clarity. We know what we can and cannot do, should and shouldn't do. But on the other hand, so to speak, it's also acted as an amazing gateway and bridge because now what we see, a lot of traditional financial institutions are exploring the capital markets aspect of Web3. They actually come to us because we can show we're regulated, we understand what you come from, but we also understand this world. We can be that gateway.
Yeah, that's very powerful. That's very powerful and ahead of the curve in that sense. Talking about ahead of the curve and taking time with things, let's say. As we alluded to earlier, you have a longer career outside of this industry as well. As I said earlier, that gives you more material to compare. I'm curious, with that lens, what are maybe trends or developments or any observations about the market that you think that a lot of other people are missing right now?
I think so. That's an amazing question, and interestingly enough, I like it because it's a very practical question. I think there's two ways you can look at this, right? So I'm going to break this down into two markets within Web3. I'm going to address the capital markets and I'm going to address the underlying technology because I think they are separate. On the technology front, I think everybody expecting everything to move on chain overnight, it's not going to happen. We're looking at RWAs right now. Everybody wants to tokenize every single RWA, but we have many discussions. Who's going to buy it? And that has not been solved yet. The other area of capital markets, which I think people are hoping for, is they expect there to be an influx of capital into our market. They expect the whole world to come in and start buying every single asset within the world of Web3. That's not going to happen. The way you should look at it is the credit curve. Institutions will look at Bitcoin, they look at Ethereum. They may look at another one or two coins beyond that. But going down to the coin that's ranked 100, it's not going to happen. And to be fair, and it's not just crypto. Imagine a bank who invests in equities. They will invest in blue chip. How often do they really go down to the tail end of penny stocks? It just doesn't happen. On the tech side, there is a world where a lot of the layer ones right now are almost searching for a purpose, for a reason. And I think that's pretty interesting because a lot of them now in their mind, they're like, look, let's go to this institution because they can use my technology. And obviously the lowest hanging fruit because of the nature of DeFi is to say, let's go to the banks. What they don't realize is how banks are set up. A bank is unable to take an external technology product, which is open-ended, open source, so to speak, and use that. And the reason why is, well, banks are concerned about privacy, custom security. That is what their job is. What they may do is use parts of the technology, but build it themselves. And I think these are things which we have to be very, very aware of. Yes, there are a few pilot programs which are really successful, but to, for instance, expect a bank to fully move onto a layer one for all of its blockchain needs, I think that's quite unlikely anytime soon.
Interesting. I think it goes back to that mismatch and that disconnect, right? That a lot of these market participants that we're in, they simply miss the frame of reference for that which the players are operating in that they now want to connect with, right? Banks, institutions, etc. They just don't understand them. Yeah. What you mentioned capital markets a lot of times. Now that's that's a term that gets used a lot, but not always necessarily explained. Just to be on the same page with everyone and for our listeners,
Of course.
when you talk about capital markets, like what do you really mean?
The public market aspect, the part about tokens, the part about utility tokens as we move into RWAs, the part where people look at it and, for lack of a better term, see this as their playground to supposedly get rich in. That is the capital markets portion, right? It is that public tradable market. It is something that you can equate to FX markets, equity markets. Crypto is its own market. And I think that is an area which is evolving. The microstructure and macrostructure of the market itself is maturing. And we are seeing similarities, right, between what you would see in commodities, for instance, or FX. We're seeing them grow within that crypto utility token world as well.
Real quick, what are some commonalities that you're spotting that
Sure.
in what ways is crypto resembling commodities more and more, for example?
Sure. I mean, well, firstly, a lot of people were saying that crypto is not a security, Bitcoin and Ethereum, but rather the commodities, right? There was this whole argument for it.
Right.
But I think it goes beyond that, right? Let's talk about the basics of what it takes a market to survive, right? You have basic spot levels, which we all understand. But then you see the evolution of volatility. This is crucial. And if you think about evolution of markets and how that goes from level 0, 1, 2, 3, this in its own right helps evolve a market. It's almost like a very positive flywheel. If you just want to remain at Delta 1, which is spot levels, yeah, you can. But can you then have innovation of product? No. And realistically, what people don't realize, way to almost leverage out to expand the market is via financial engineering. But to be able to do that, you need more tools. And that's where we saw the evolution of perpetuals. We saw the evolution of the futures market. The CME, you can trade a bunch of these things now as well. The volatility markets, volatility services, this allows different forms of pricing to happen. If you think about why this is so important, because everybody hopes that I buy this and it's going to the moon. I mean, that's where I still remember first joining. Everybody talked about their Lambos, HODL, moon, and all that sort of stuff. What people don't realize, though, is that for a lot of these people, it's great if it does actually happen, but how do I hedge my downside? And that is where you see this evolution of markets. And I think these basics are what have set a very strong tone to build upon.
Absolutely. It reminds me of some conversations I had with David Lawand from Falcon X at the time, who was talking about options and the importance of options in crypto. Also Tien from Pandal and now Boros, right? Who really like innovating within the crypto market, but like instruments that outside of it were already known. So I definitely see where you're coming from about market maturation and how these different instruments really progress the market forward. I have another question to ask you.
Of course.
You have been you have a long track record, specifically in the APAC region. You did long stints in both Hong Kong and Singapore, which are cities that are very well known for this sort of East meets West. And I have a question around that because I think you'll have particularly helpful insight there, perhaps, is that given the how things are shifting on the global stage, right? I think there's a lot more interest lately for the APAC region, at least from people from the West, maybe, or elsewhere. I'm very curious about your perspective on what would you say to these people that are looking at the APAC region and maybe want to operate here, but they're coming from outside. What would you say are like the critical criteria to have business success here, coming from outside specifically?
Well, firstly, I fully agree with you. Interestingly enough, during Consensus, about 90% of my meetings are with our clients who are coming over from the West. And the reason why is they won't understand it, right? It's the same thing whenever I used to travel to Consensus or I go to DAS in New York or London. A lot of them ask, look, what's happening in Asia? We see a lot of opportunity. How does it sit? And I think we have to understand why, what's different, right? No one can argue that when it comes to where everybody looks for guidance about the next step in crypto regulation and as a marketplace, we all look to the US. And the reason why it's one of the largest markets in the world when it comes to consumerism and in utilization. And also when it comes to innovation, it's very, very good at that. Then you move to Europe, which has a very proud heritage. And I think a lot of that becomes very interesting in terms of, well, are they really ready to adopt and allow new things to grow there? Yes, there's been, if you think about the first wave of protocols that came out a couple of years ago, a lot of them did come out of Europe to begin with. So that was a very interesting birthplace, actually. The Middle East is almost a region that wants to adopt, but they also have a very strong cultural heritage, although they are very financially rich. And obviously now is a very difficult time for them. APAC, I feel, when I talk to founders, and before I go into what should they think about, I love the APAC region as a potential marketplace for many founders. And the reason why is this. Ultimately, what are founders doing? They're creating a product. What does a product fundamentally need? Well, you need users. And what makes APAC so interesting is the breadth of division of users you can find in this region. You have everything from developed to emerging market to developing nations. And this means that you could come up with a variety of products and test them depending on where your market segment is that you're aiming at. Another thing which is very prevalent out in this region is access to mobile phones and telecommunications. That's critical because if you think about it, people always talk about the concept of crypto is the blockchain, it's valuable, it'll be fine, it's immutable, etc. Yeah, but if I don't have a phone to access a lot of these products, at the very least, we're not going to use any of them, right? The interesting thing you see as well is Asia has everything from the capital markets interest in Web3 in markets like Korea, Japan, Singapore, Vietnam, for instance, to the technology that can we use it, right? With the number of programs you see it out of Hong Kong, for instance, utilizing the underlying technology. Singapore has a number of projects where they're trying to apply blockchain with government-based services. Now, what does it mean for companies coming in? Well, it's an amazing, and I don't use this term lightly, but it's an amazing playground because you can truly test your product market fit. Does it make sense? Now, to your point, what should people be aware of? Two things in my mind, above all else. One, regulatory clarity. It's great to say, I've got this amazing product, I want to introduce it into your market, but understand the regulatory landscape in that. Because there are certain things, information privacy, for instance, if you went to Japan versus Hong Kong, take very different stances in the degree of information privacy and what can be provided. That's something to be aware of. Not only that, cultural nuances. I think that's something that often gets overlooked. Just because, for instance, someone does ABC in a certain region doesn't mean they do it in the same way in Asia. And not only that, let's not even talk about Asia, let's even drill down. Doesn't mean they do it in the same way within the countries in Southeast Asia. You
Yeah.
yourself, I mean, you spend a lot of time in Thailand, like Thailand, Malaysia, Singapore, Indonesia are also culturally different that you sometimes have to localize if you want pure penetration, the way they look at things. And this can be as basic as UI UX design. I'll give you an example. Go pull up a Chinese travel website, compare it to what one of the travel websites looks like, TripAdvisor, for instance. Even the imagery and how it's displayed is completely different. And this is something a lot of founders should always factor in because it will not be a one-size-fits-all solution.
Definitely. It's yeah, as you said, I've had the privilege to spend some time here myself as well. Um Mostly in SEA, but also like in Eastern Asia. And even across those, there's like a very big difference, right? Asia is not just Asia. Asia is like a tapestry of all these different cultures and business practices. And I agree. It's like as someone coming from Europe to here, it definitely, yeah, it takes some time to adapt to certain things, how they do certain things, but even the way they think about how to handle anything from like business arrangements to even like personal interactions, right? Um, so I've definitely grown a new appreciation for patience, let's say.
Yes.
Yeah, it's very healthy. Um, Talking about the different markets, um, and you alluded to this as well, the market that we're currently in. Yeah, it's under a bit of pressure. It's changing a lot. As you said as well, just because we're going to see adoption of blockchain as a whole doesn't necessarily mean that all tokens are going to see value accrual, right? Um, Similarly, I think we've seen a pullback on the number of token launches, for example. Now, I'm well aware that you guys do more than just that, but that's certainly one thing that comes to mind when I'm wondering about like, okay, how does GSR um, basically stay agile in this market? And yeah, what are things that are happening in the market that are impacting the choices that you're making, and in what way is it doing so?
Of course. So you're absolutely right. I think staying agile, staying nimble, and to your point earlier on, which you rightly pointed out, diversification of business lines becomes crucial. That's
Mm,
what we're aiming to be, right? The good thing, and to break it down and to look at it from business specific, look, market making, yes, there's a lot fewer new launches going out. Uh, what we are proud of is because it is now becoming more well acknowledged that GSR offers white glove. We offer a very adult regulated approach to working with projects, and therefore there is an element of trust. We have actually been involved in a number of the newest launches in the last 1 year. So that's one part of it which has stayed good. Obviously, it's not as many as we saw in 2021 and some of the booming years, right? 24 and 25, for instance. But the other aspects of the business is, interestingly enough, we do have an existing client base of projects which are listed on venues, and they continue to require liquidity. The reason why is these projects are still delivering on their roadmap. They're still having strategic partnerships. They're still rolling out product. Now is the time where they need us the most. Because if you think about what every project goes through, they go through inception, they go through launch, they go through maturation, and they scale. In all of
yep.
these phases, having the right liquidity partner is crucial. And the reason why is this is not like traditional finance where all participants converge on the same venues to provide liquidity. Liquidity within the world of Web3 is still very, very much fragmented. And so having a market maker you can trust to access multiple venues, that's where we come in. The other aspect of the business that we're seeing an uptick on is actually, to your point, treasury management, OTC services. Companies still need runway. They need to know, how do I hedge my existing risks? How can I generate returns on what I have? It's great to say staking yield, but that's only one aspect of the business. There's also, via smart option strategies, via strong treasury management, you are able to generate runway to keep the lights on, to keep your vision going. So these are areas that we've tended to focus on. The other part of the business that we're seeing a lot of growth in is what we call systematic OTC. We are able to bring, because of where we sit, straddling traditional finance and capital markets of Web3, we are able to bring best-in-class FX rates. And if you think about it, right now, a lot of crypto and Web3 is traded natively in the US dollar. But this is going to change. This is naturally going to evolve. And because of that, for instance, would you eventually one day want the ability to be able to trade Bitcoin bar on a very tight spread regular basis, for instance, rather than every time have to go Bitcoin dollar, then figure out how to do remittance, hit dollar bar? That's where GSR comes in. We are seeing a lot more interest of working with payment companies on off ramping. And the reason why is they recognize that we have the ability to tighten FX across what we call the triangular FX, which was crypto and multiple FX pairs, and really bring it. So, and what this does is it naturally makes the market more efficient. So this has been a business line that we have seen grow significantly. I think we've started this business over a couple of months, and even on a very small scale, without scaling it fully, we've done more than 5.5 yards of volume in that time. And that's really just testing the pipes, making sure. But this is the type of business that I think, to your point, being agile, understanding, and almost coming from that background where most of us were in traditional finance, understanding that there is no such thing as a bank or a financial institution which only did one thing. They had multiple business lines, and that's what you need to do in this space. So we take pride. Interestingly enough, yesterday, we made an announcement. We just made an acquisition. We acquired Autonomous and Architect, which are advisory firms to projects. And that is almost us going down the other side of the pipe, going the other side of the vertical to help these young startups. So it's almost becoming a full suite, full service provider throughout their life cycles.
Interesting. I also noticed another thing about your answer, which is interesting because it revealed something, an underlying assumption in my question. But your answer, what they have in common is that they're all focused on sustainable and durable business, right? And I think that's a shift that we're seeing in general in the space a little bit right now, like a focus on revenue, etc. But if you think about it, my question about token launches inherently has this sort of one-off business model type mindset to it.
Yes.
So I love that answer, and that's that speaks to your business philosophy, right? And the long-term vision that you guys have. Talking about long-term vision, what are future events that you might anticipate that might or might not be coming down the pipeline that would that would trigger course adjustments for you guys as a business?
So, I mean, that's an amazing question. And it's almost like, what is the vision? And if right now I give you an answer, knowing this space, 3 months from now, it's probably going to change, to be realistic with you. But look, overarching themes that we're looking at, events we're seeing, we're already starting to see them. We're seeing the shift of financial institutions looking at this space. Now, does that mean that you're going to see the banks onboarding with an unregulated exchange and trading up a storm? No, I don't think you're going to see that. But what you will see is more and more of these financial institutions recognizing, in the very least, Bitcoin is an alternative asset class for them. It's something that their clients are demanding. And I think the other part of where we're seeing scalability and events coming is in the world of RWAs. RWAs is a very interesting topic for a lot. It's very topical. And the reason why is, well, everybody knows there's so much stuff that you can originate, but nobody has actually taken a step back and says, it's great having all these products, but who are we doing it for? It's the same thing of an Eskimo saying, what do you do? I sell ice. How much ice do you have? I have 5 tons. Where do you live? I live in the North Pole. You look at it and you're like, yeah, then that's not meeting a need. There's no point. No one's going to use it. And I kind of
Yeah.
feel in that direction, maybe we're looking at RWAs wrongly. Part of that thing, and that's where GSR is looking as well. RWAs is something that we understand because we understand the underlying assets. But we think that there is so much more that you can do in that space. And so hopefully over the course of the next few weeks, we may make another announcement, but we're actively looking to pursue in that space. And what that does for GSR, what are ultimately, and maybe the right phrase is, what is our end state? We view ourselves beyond capital markets partner. We view ourselves as almost the investment bank within crypto. We have the ability to be able to work with one client and offer them the full suite of services that, I mean, hopefully they never need another capital markets partner as long as they're in the space. That is the ultimate goal and ultimate aim. So to your point, do I think that there is anything particularly that would outright cause a complete shift in direction strategy? No. If anything, we have developed that core strategy and fundamental that we think is very lasting, but we are very well aware we're adding on pieces on almost a modular basis to ensure that we remain best in class as well as full suite for all of our clients.
Yeah, I see what you're saying. It's like the strategy is set, that remains the same, but within that strategy, you start applying different tactics, right? It's
Yes.
almost like that. Yeah. Okay, that I love that. Um, okay, so investment bank, you guys are gonna do mergers and acquisitions and
I
IPOs,
mean,
anything like
well,
that soon?
we just did an acquisition, put it that way. I mean, so you can go read about it. It happened overnight where we acquired an advisory firm, as I just mentioned.
Right.
What they bring to the table, they have the ability to work with early startups, helping them set up their foundations. It's called Autonomous and GSR Digital Advisory. Uh, they also help projects with go-to-market strategies, token economics. And what we ensure is we ensure it remains arm's length, because I think there is always this thing that we have to be worried about conflict of interest, and we must do it in the correct way. So that is a separate team that these projects will talk to. And when the time is right to have a discussion on market making, treasury management, then it moves to the next cycle within GSR, the next team within GSR. So we're already doing that. And I think, are we ahead of the curve? Maybe we're at the front of the race. Are we so far ahead that competitors can't catch up? No, I think we have to stay on our toes. But I like to think we have built a brand and a franchise that is almost unbeatable in this space because of just how long we've been around and our approach to business in this time.
Absolutely. You guys have shown it time and again. And I think it's very, very I think from the questions and the answers to it, it's also very clear what drives that, right? What drives that competency and the achievement and the level of performance is also like the underlying philosophies and understanding and experience that you guys bring to the table. CJ, this was a very insightful conversation. I really enjoyed it. If people would want to continue the conversation with you or with anyone else at GSR, they want to learn more, what are places you would like to direct them to?
Yeah, no worries. I always tell people go to so it sounds very cliche, but go to our website. We do have a contact us form. And interestingly enough, it does get blasted to the whole firm. So we actually do see these as they come through. The other aspect where I've had it is I've had a lot of people reach out to me on LinkedIn. I tend to be very responsive. Interestingly enough, that's where you reached out to me as well,
Yep.
post our meetup in consensus. Uh, but really, you will always find this at the largest conferences, even the smaller regional ones within the region. All you have to do is look out for this T-shirt. The only people wearing it tend to be GSR staff, and have a conversation. I think the one thing I talk, and this is my philosophy when it comes to dealing with potential clients, they should speak to everybody on the street, because you see what, having a capital markets, and I use the word partner very strongly, means that you trust who you're going to be working with. If you are going to engage in a contract, and it's vice versa, I have to be able to trust you as a client that you will do the right thing as a client as well, right? And not put me in a situation where I have a bunch of problems as well. So it is a two-way bilateral thing. And obviously, yes, the interesting thing is we have been known, or people say GSR only wants to work with the biggest projects. Yes, we do work with the biggest projects. But since I've been here for over my 6-year tenure here, I've worked with some of the projects which I have seen go from top 1,500 market cap top 150 market caps. And it's a journey. To your point, we have a very long-term vision of working with people. We work with founders who want to truly build in the space and build in the right way. So I don't think there is a phraseology where you say, is there anyone who's too small for GSR? No, there's not. And especially now, if there's somebody who has a business idea and wants to flesh it out, build his team, white paper, token economics, we now have the advisory arm, which can assist them and guide them on that journey. So to speak, I kind of feel we're doing it right. It's been a lot of fun, this journey, and I expect it to continue the same way.
Definitely. Let's definitely do that. You are definitely on the right track. And let's definitely continue and walk alongside on this journey and this road. CJ, thank you for coming on. As I said, it was really enjoyable and insightful. Yeah.
Thank you so much for having me. It's a real pleasure, and I love what you're doing over there. It's really amazing.
I really appreciate that. I really enjoy hearing that. That's what we do it for. Thank you, CJ.
Thank you so much.
To our audience, we hope you enjoyed it as well. This was Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces move into markets. See you on the next Market Cap.
If you enjoyed this episode, you can find more of our research in the following ways. For in-depth reports, many publicly accessible, join our research platform. For protocol and market summaries and highlights, subscribe to our newsletter. And for our next episode, follow us on X and YouTube. All links in our bio.